All right. Welcome to yet another training video of, on our previous section, we introduced a concept of market structure where we briefly started analyzing the different market structure in the financial markets, ranging from a trending market, which we intensively talked about. I think we've just established a base on a trending market. For further understanding on trending market, we're still on trending market. We will talk about support and resistance as a branch concept in a trending market. We'll talk about support and resistance today. Support and resistance, I'm going to put it up here. Support. That's we have support and resistance. Support and resistance. Now, what is support and resistance is very important. You get a basic meaning of what support and resistance is. All right? So, support is otherwise known as the floor. Right? It's otherwise known as the floor. Right? I will use this for instance. So areas, if we say price, let's say price is around areas, let's say price is around these zones in the markets. Let's say price is around areas in the markets. So when we classify that below this zone is called the support, and above is called the resistance. This is just a basic analogy of what support and resistance are. But then, in the course of this training, we'll learn sophisticated methodology, sophisticated way to placing our support and resistance using price as basic tools. Because we know for sure that price is the basic information available to a trader. So when we set our dynamic, we learn to set our dynamic support and resistance in most efficient way according to price. But it's important you learn the most basic way to setting support and resistance. As we go deeper, it will become more effective and more efficient for you. All right. So proceeding on that, like I mentioned before, support is, simply put, support is the area below price, and resistance are areas above price. All right. So in a situation we'll have price going up and down, we can identify support below those zones and identify support above that zone on the basic terms. But also I have some, now look at this. Price trending downwards, that will have a downtrend around the zones. All right. So from this zone, I'm talking about just this area, we can say that this was a support, right? And then from this area, we could say that this same zone is a resistance. Let's go back to charts. Now, that is to say that the next support can become the next resistance, or the present support can become the next resistance. Let me use this for instance. Let's say at this zone, when price was around this zone, we had this area as our support zone. let's say we had this area as our support zone for price around here. You saw how price rejected to all of this zone or respected all of this area, right? So let's say here was a support to all of these price areas. Moving forward to all of these price areas, this zone was a support to it. And then how the zone also becomes a resistance towards this area. Now look at how this zone became a resistance, resisted price all the way down here. All right, is something to prove to you that the next support or the current support can become the next resistance. We can also have several other instances where our support automatically became our resistance. We can also have where our resistance became our support level. All right. So let's look at a few areas. Let's see if we can pinpoint a few areas where price resisted and then automatically became our support level. So price resisted all of those zones. Price resisted all of these areas. All of this area was resisted from price. Okay, the price dropped all the way down there. Okay, now we saw how this area also became a support to the current market. This is a current candle drawing up. You saw how this price bounced here and what bounced right up. Price touched the same resistance and bounced right up. So any zone, any support zone that has been broken can automatically become a resistance. Theoretically, we put it this way. Let's say we have a support. We have a support around this zone. So let's say that this was our support, of course. Sorry about that. So let's say this was our support and price tested and went up, went up, came right again, and let's say it went up, and automatically it breaks that zone. When price comes back to that zone, what happens? It becomes a resistance and it drops back. All right. So this is the scenario of what happens of when support can also become a resistance. All right. It's very important to pay close attention to this. So we are talking about support and resistance, and we'll look at it in the most dynamic area. So this is what happened here. Price had a support around this level. Price had a support around this level, and all of a sudden broke it, went and retested that zone, and of course, price rejected that. This same support became our resistance around this level. I believe you can see my cursor around this level. Similar thing happened when price was a support around the zone. That price held this zone held price all the way. Once price broke that zone and it retested, it became our resistance. All right. So this is how your support can become your resistance. This is how your support can become your resistance. So here we have, for the case of an uptrend, the previous was for the case of a downtrend. Here is for the case of an uptrend. So here, price, we have the zones as our resistance. Price rejected area around the zone. When it hits there, it dropped all the way back down. When price broke it, you can see when price came back to that zone, it acted as a support. So your current support can become your next resistance, and your current resistance can become your next support. It is a known fact. All right, let's proceed. So it's very important we know that support and resistance are known as proven areas where buyers and sellers find some equilibrium, right? When we're talking about the word equilibrium, we're referring to equal, all right, parity. That's equal price. Okay, so there are major turning points in the market. So if we have a situation in the financial market that price goes from point A, from a particular support level, let's use this for instance, and goes all the way up to the next resistance. Let's use this for instance. So this zone becomes an agreed level, an agreed point that buyers has negotiated with sellers. When you sell to this zone, we will buy. And sellers also negotiated with buyers. When you sell or you buy to this zone, we will automatically what? Sell. So it's an equilibrium. We have decided to what? To split this price. Sell to this point, you allow me buy. I buy to this point, you allow me sell. So support and resistance are where sellers and buyers find some equal agreement or equal resolution. Support and resistance levels are formed when price reverses and change directions. We will talk about more technical ways, and I think we are doing we're establishing a base, a ground for support and resistance, so you understand much better. All right. What we said that support and resistance are formed when prices reverses and what change direction. So when there is an uptrend, so we remember we're talking about trending markets. We have up and down trend. When a trend reverses, let's say from this point we'll have a downtrend, right? So when this trend reversed at this point, it's left there with a support level, right? The next time price comes, areas around there is going to likely respect that zone. So you saw a reversal around those levels where price touched and went back up. Here, a rejection close to that level. Similar thing happened here, all right, until price moved away from that. So support and resistance levels can be formed where what price had a reversal on, or where trend had a remarkable reversal. Okay. In other words, they tend to what contain price movement until, of course, price breaks through them. So, what happens here is there was a resistance from this point. Sorry, there was a support background on this point, which, of course, bounced price right up, and price came back to that zone, respected it, came back, respected it. Let's take for instance, there is a break away from this zone. Assuming this price, let's say this price got here, went up and came back and broke this zone, the next time it's coming there is automatically going to respect it. It is not in for a vote. This is what happens on that particular level. Price will automatically what? Respect that level. So automatically, you know that has become what? Our resistance. This is how support level can become a resistance, and how resistance level can become a support. In trading markets, support and resistance are formed from swing points. What are swing points? Swing points are levels. Let's see, here we have higher highs on uptrend, higher lows, right? So higher highs, higher lows are swing points. Higher highs are swing points. This is a swing point. This is a swing point. This is a swing point. They can also be called retracement levels, retracement zones. So price, of course, was maintaining if an upward order, right, was moving, making a forwarding order, upward movement. But why it's making that movement is creating or leaving a pattern for us in form of swings. So it goes up, it comes down, goes up, it comes down. So we can say that right here we'll have a support, the first swing point. Right here we'll also have a support, the next swing point, and right here we'll also have a support. Remember the rule in an uptrend. We always state that an uptrend will always have a rule, of course, also applicable to a downtrend. We're still on trend. So we know that for an uptrend to maintain being an uptrend, it has to record patterns or structures in form of what? Higher highs and higher lows. And we also should know that the current high, the current low, I beg your pardon, the current low should not or must not be lower than the previous for that trend to still remain valid. All right. So if it's on an uptrend, we must know that the current high must not be lower than the previous. Sorry, the current low, I beg your pardon. The current low must not be lower than the previous. In a situation like this is what I'm trying to explain. This is the current low. Take for instance, this is the current low, and this becomes what? The current low right now. So this is going to be, this area is now the previous low, and whatever low that is going to form from this swing should not be lower than this low. So in a situation in the market, we'll have this area. So a low here, it should not break below the previous low. So we should not have something like this, a high, and something like this, a low. You getting the point? This is the previous low, and this is the previous low. The previous low should not be lower than the current low. I beg your pardon, should not be lower than the previous low. It's a rule of thumb. You should always bear that in mind. That is to make sure that that trend is on an uptrend. Okay, so in a trending market, support and resistance are formed from swings. I already showed you what a swing could look like. So we have this, right? We have a swing point. The swing point, right, becomes a support, and then the swing point becomes a resistance. Remember that in an uptrend, we have a higher high and higher lows, higher highs and higher lows. Why for a downtrend? Why for a downtrend we have what? A lower low, lower highs, lower low, lower highs, lower lows, lower highs. All right. It's very important to take note of those structures in the financial market. So if we are having an uptrend that is making a higher highs and higher lows patterns with swings at the low, of course, those swings are classified as what? Retracements, higher highs, higher lows. The swings are reliable or can be our what? Our support levels. Our support levels. Our support levels. Right? Why? For a downtrend, the swings above becomes what? Our resistance. Remember that for a downtrend, we always have lower low and lower highs. So for a downtrend, we have a market structure in this pattern. Let me put up something there. So for a downtrend, we always have market patterns like this: higher high, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. But then the market is repetitively going downwards. So we can say that the lower highs are what? Could be reliable resistance areas. We just, all right? So the lower highs becomes our swing points, right? For a downtrend, why the lower low, sorry, the higher low becomes our swing point for an uptrend. Is that, I believe that is getting absorbed. So we always portray those examples, showing you exactly what it means. Like so, the illustration on my display just shows us previous swings, the previous swing points that acts as what? As a level, as a support level after a breakout. So I always retraced it, and I always mentioned that the next, our current support or our current resistance can become the next support or resistance, right? So in this area, I think I emphatically explained this very, very intensively. So we mentioned that here was a support holding price all the way here along this area. But when price broke that zone, it went back there and what became a resistance, that's holding price from going further. When the market makes the retracement move, it respects the previous swings points. It's very important, which will represent the beginning of another implosive move. Remember, we talked about implosive move and retracement moves for that previous section. So I believe you know what we're talking about when we mention implosive and retracement moves or pullbacks, right? As you can see, when the market takes the previous swing point support level, it goes up. All right, you can see that. By drawing a support level in an uptrend market, we can predict when the next implosive move will make or will take place. So by carefully, let's say, price making a higher highs and a higher lows in an uptrend market, then of course we already know the structures and the patterns for an uptrend. That every swing point can leave us with a reliable support levels. So by drawing or placing support, we should know that when price is approaching areas around here, we should be looking for a confirmation for what? An implosive movement, that is a confirmation for a buy. Price nearing areas around our previous swing point should be an alert, a wake-up call for a confirmation for an implosive movement. I believe we're making progress. All right. So the market makes an implosive move. If you understand how price action acts in a trending market, you will predict with accuracy when the next implosive move will begin. So in the course of our training, in the course of our persistent training, we will come to terms with proper technical tools. And of course, it will unveil to our minds how to know and when to know when an implosive move would take place in the market, combining or using support and resistance as a very, very prominent tool. Another way to catch the beginning of an implosive move is by drawing what? Trend lines, right? So drawing trend lines also helps you catch implosive moves, right? This is also another technical skill that you have to learn if you want to identify key linear support and resistance level. Now, this is on the display. I'm going to display a very, very important thing. Now here, so you know very, 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 very well that in a downtrend, we have trend lines. And how do you draw your trend lines? You draw trend lines connecting two or more swing points. In a downtrend, market always makes a movement or a patterns or structures in forms of higher, lower lows and lower highs. So you always have this pattern for a downtrend. You always have this. So you always have this lower low, lower high, lower lows, lower highs, lower lows, lower highs. All right. And it continues until there is a reversal. So how to draw your trend line is so simple that you just don't need a prophet or a teacher to describe that for you. So yeah, you make sure that it is you shouldn't. All right. So this is not a perfect. So let's just go to the chart and get how to do that properly. Of course, you don't expect that random pattern to be accurate. So we have, let's identify a good downtrend and try to connect a swing. Remember that whatever we do here is what's applicable, that is, can also be applied for an uptrend. So whatever that is applicable on a downtrend can still be applied on an uptrend. So let's say we have a few downtrend here, right? So connecting one or two, at least 2 to 3 swing points becomes a trend line. So in a falling market like this, price goes up and down, up and down. I think, let me look for a proper downtrend, a proper downtrend. Okay, we wrap this. Let's use this uptrend for illustration. All right. So this is a good uptrend, which of course we're connecting areas at it. So you have a swing point around this. You have a swing point around here, a swing point around here. All right. So this can also act as what? As a reliable support for you. Price went all the way up. Whenever you observe price coming down to that line, or to the line you've drawn, you know that it is what is approaching another reversal, is approaching near a support, and which can, of course, trigger a push-up back in trend, or which can trigger an implosive move, right? We can trigger an implosive move. So the market makes an implosive move. If you understand how price action works, you'll be able to predict the market with accuracy. So this is how a trend line is drawn, linking or connecting more than 2 areas. So this is on a rapid downtrend all the way here. So we have a swing above, swing right, swing. So trading the financial market, when you're observing that price is approaching your trend line, it calls for an awakening into what? Into considering other confirmations before an entry or an execution can be made. Remember, you do not execute any trade just based on what? A particular confirmation. So how to draw a trend lines? I've already started establishing a theoretical pattern to drawing a trend line. To draw a quality trend line, you will need to what? To find at least 2, I repeat, at least 2 minimum swing points. 2 is so super good enough to become a trend line for you. You need to what? Draw, at least connect 2 swing points and simply connect them with each order in this case, all right? The levels must be clear. Don't try to force a trend line, right? Don't try to force a trend line. So here, we just know this is an uptrend, so we can just connect 2 areas. That's all we need. 2 areas at least, minimum of 2 areas, right? So we connected this area and this area. And this can also help you identify what the market is doing. Is it making a downtrend or an uptrend? Once there's a confirmation that there are 2 areas connecting to each other, it automatically becomes a trend. Now you know that you are trading either an uptrend or a downtrend. It's very important. Don't use similar time frame to draw trend lines, right? So if you're drawing a trend line on an hourly time frame, you can as well switch towards a 30-minute time frame. Okay, you can as well switch to a 30-minute time frame for a confirmation. All right, so this is what a trend line looks on a downtrend, and this is what it looks on an uptrend, connecting what? Two or more swing points can automatically give you a good support or resistance trend line. It's very important. You know how to draw it. It doesn't require a careful studies. All you just need is what swing points. You don't even have to struggle to identify how to draw or learn or master how to draw a trend line. Okay, so when the market makes this way, trend helps us towards anticipate the next implosive move with the direction of the market. All right. As you can see, the display on my screen, by drawing it the right way, you can easily predict the next movement. So by having this trend line on your chart, you obviously know, you are now obviously confident that price approaching areas here, you should now be very at the high alert that price might reverse or might have an implosive move towards trend, right? Closest here, you now know the price is going to make an implosive move towards trend. Like we mentioned, first thing you must do or you have to do is find what the previous swing point is. Very important, either support or resistance, and try to find trend lines as well. All right. So that is for on an uptrend market. So you always have your chart with you. So the very simple thing to do always, you've come to analyze the market, is what? Figure out or know the structure in that market. Is it making an higher highs and higher lows movement? All right. If it is making that movement, we try to confirm by connecting one or two points in the financial market or in the market. Of course, after that, that can become your support. All right. You can now proceed to setting swing points in form of horizontal line. Remember that the trend line, you make use of what? A vertical line. All right. You can also place your support and resistance by using the horizontal lines around your chart. And that is just a trend, right? That is the basic way you can do your support and analysis, your support and resistance and analysis. So going forward or moving into the advanced training, we would of course disclose a more peculiar way to setting your support and resistance according to price. This is the basic way a beginner should know how to set a support and resistance. But there is a more advanced way, a more prudent way, there's a more technical way, all right, to setting your support and resistance. When we get to the deeper form of analysis, we will get there, we will learn how to set support and resistance using price, using the fluctuations of price. But for the basic level, right? For the basic level that we are at now, we stop it at what? The basic terms, so you don't get deeper or deeply confused. When we progress, as we persist and grow, we'll get to mastering those technical and advanced system of doing that. All right, that is all for now. On our next section, we will continue with the next market terms. Remember, we are still on market structure we just treated the trending market where we have the uptrend and the downtrend, which of course, I have successfully covered from both an uptrend and a downtrend. On the next section, we will talk about the ranging market. And of course, remember, we also have a choppy market to discuss. That'll be it for now. Always go back in your chart, go back on your chart, go back in time. Try setting those zones. Try mastering. Try creating this awareness. Try creating this familiarity between your eyes on the chart. Or that is how mastery comes. Mastery does not come by just learning on each section and going home. Mastery comes with consistent practice. What we do here, I always say, is not enough. What you do on your own gives you much results, right? This is just showing you a path. This is like taking you to the stream, right? But we can't always force the horse to drink. It is a personal decision. That'll be all for now. On our next section, we continue on the ranging markets.